Hi, this is Michael Waitze and welcome to ATP. Access to credit has long been a challenge for the underbanked, especially in emerging markets. But what if that ubiquitous smartphone could be the key to unlocking financial inclusion? Can we employ AI, machine learning, and digital collateral to offer affordable credit to those who need it the most? Rene Payan, the country manager for the Philippines at PayJoy, joins us to explore how PayJoy can turn smartphones into financial assets, why sophisticated data science is central to their risk assessment model, and how PayJoy is reshaping financial inclusion. Rene, thank you so much for joining the show. How are you doing today?
I'm doing great. Michael, thank you for having me.
It is my complete pleasure. So let's just jump right into this in a big general terms, right? How is PayJoy redefining financial inclusion in the Philippines by using AI-driven credit models and smartphones as digital collateral?
Yeah, I think at the core, it all really starts with our mission and ethos. Right? Pedro's mission is to provide financing for the next billion, right? Like going for the historically underbanked and overlooked. So when you think about why these customer groups around the world and the markets that we serve go overlooked is because, well, they don't really have a ton of data to be able to offer you so that you can make smart credit risk models. At least that's the traditional way of thinking.
Right.
When you really look in these markets, there's a lot of data that exists, alternative data, traditional data. I think what separates PayJoy from the current ecosystem, the incumbents, is we're constantly looking for a reason to give that customer a yes. I think historically, this credit risk models kind of look for reasons to tell customers no.
Yeah.
Right? You had a negative mark in the past, maybe past due on some utility bills, things like that. We look for the small nuggets of information that tell us this guy, Michael, it looks like a good risk. I can't prove it on paper,
Right.
but I see enough there that I can find a yes. And that's where our digital collateral really makes that key difference, right? I can find that yes, but then I have an added piece of protection and motivation to help those customers.
I want to share a personal story with you. Right. I was working at Goldman
Yeah.
Sachs and I was living in Tokyo. This idea of getting to yes, right, as opposed to getting to no. And I was thinking about this just as you were talking. I bought some land and then I wanted to borrow some money to build a house on that land in Tokyo. And at the time I was working at Goldman Sachs, which was a stable job. I was making a decent amount of money. And the bankers kept coming over to my house to interview me and talk to me. And even at my income level, they were still trying to find a way to say no. And being a foreigner was a big disadvantage. I actually had to get my wife's father, and I was making more money than he was, but he was a doctor, to come up to Tokyo to say, I'll countersign for this. That was the way we got to a yes. So I can only imagine that if I were making way less money, right, and was underbanked, I had a bank account in 3 different countries at the time, that I never would have been able to get there, right? Can I ask you this, though? Where does this ethos come from for getting to yes as opposed to getting to no? What's the genesis of this? Why do you care so much?
Yes, I can say you first on Pedro's side, looking at our the CEO and our founders and kind of the background they have, right?
Yeah.
Like really the motivation stems from our CEO Doug having spent time in the Peace Corps serving
Ah,
African villages struggling to get electricity. Right? So there, through some very ingenious and creative ways, they got solar lanterns to these small rural villages. Right? They kind of found a way to give those customers a yes, provide them electricity. And what he saw was these customers that couldn't prove they're credit worthy, right? But if you can give them that access on something where they see a ton of utility, like your electricity,
right.
they find a way to pay. There's strong motivation because it's not that these customers don't want to pay. It's just that they can't prove to you right now that they can pay. And then me personally, right, when I came across Pedro back in 2015, um, this ethos resonated with me because it reminded me of my family. My parents, both my parents were Mexican immigrants. I was born in the U.S., but I grew up seeing firsthand what it's like being on the outside looking in when talking about this credit ecosystem.
Right.
And back in when we launched in 2015, that was the customer segment we were really trying to serve in the U.S. Very early on, is these recent immigrants that want to pay, are capable of paying, just can't prove it to you today. So I thought, like, wow, that's that's my family, that's my experience. If I can help people like them, it's all worth it. And nearly 10 years later, we've been able to help over 50 million people, like my parents, in that same situation.
Your parents must be super proud. Can I ask you this? What do you mean by digital collateral? Like, how can people understand what this means, and how does that lead to this understanding of we can actually provide these people with credit?
Yeah, absolutely. So what's a key advantage of PayJoy is we've been investing over the past 10 years in our own proprietary locking technology. So this is a digital lock that we use to collateralize the smartphones that we'll lend to our new customers. So when you're a customer that has no credit, very little banking information, and you want to get a new smartphone, today you can really only afford what you have in cash. Now you come across PayJoy, if you have, let's say, $20, $30 cash, instead of limiting yourself to a feature phone, now you can put that $30 as a down payment and get a $120, $150 smartphone. And the key difference is when I give you that smartphone, this PayJoy app, this PayJoy technology on that device is going to allow PayJoy to collateralize that device if a customer ever struggles to make payments. And we use that to motivate the customers to pay, to get a hold of us. And it's a replacement for the traditional stick of late fees and a ton of late calls and
Right.
potential at home visits. We're going to just limit the functionality of your device. You can always contact us, contact the emergency services. We want to work with you, want to give you extensions, but we want you to get a hold of us. And once you make your payment, right, once you become current, then your phone is unlocked. So imagine today if
Got it.
at 5 p.m. you just can't use your phone.
Yeah.
Right? Imagine the type of motivation that that's going to create for you to unlock that device. And then we basically create a pay-as-you-go system. Right? If you want to use your device for 7 days, for 30 days, you pay for the credit you can afford, and you never have to worry about those rates going up when life happens. Right? You're going to miss a payment. The locking date doesn't align with your payment date, and that's where the digital collateral really plays a key role.
I got it. Can I share another story with you? My phone went off. Yes, my phone went off 2 days ago, and I never carry cash with me. And my bank card expired at the beginning of the year. This is all true, but you can use your phone as you can do a cardless withdrawal from the ATM machine. But to do that, you need internet access. So your phone needs to be working. So I was stuck in this vicious loop of I can't use my phone, I can't get any cash, and I can't pay my bill because they won't let me scan to pay my bill. I have to pay in cash. So I literally had to walk 2 kilometers away from my house to the mall to get Wi-Fi so I could do cardless banking, just so I could go upstairs and pay my phone bill. And I'm only saying this because that's what it's like for me when I don't have access to my phone, right? I'm curious, what you've found when people lose access to their phone, let's say in the Philippines, across segments, how their lives change.
Oh man, it is as painful, if not more so, than what you and I would go
I
through.
would think, yeah.
When these customers lose access to the phone, like you and I, we might have other devices, we might have other ways getting connected, or like in your case, right? Like it's a little inconvenient, but you take the time, you walk to the
Sure.
place where you can make payment, and then you get access to your phone, right? You
Right.
have a lot of that flexibility really at your fingertips. Our typical customer does not. Our typical customer lives in the province, maybe 3, 4 hours away
Yeah.
from the nearest location where they can pay.
Right.
They might have to go days without paying. So when their phone is locked, that means they can't get a hold of their family, of their employers. It is a different level of pain, and that's not our intention, right? Our intention isn't to create that pain and inconvenience, and we're constantly finding ways to make it more accessible, right? So instead of locking your device at 5 p.m. as soon as you get off work, maybe we'll push that lock a little later that night to give you some time to make it to that nearby store. But the amount of motivation that's created the second that device is inaccessible for what they need it for, at a minimum we get that phone call, and once we get that phone call from them, it's when we can really work to figure out what does this customer need.
Yeah. I mean, I've always thought this idea of charging the underbanked and the underserved a late fee is like trying to take water from a stone. right? Clearly, the guy or the gal doesn't have enough money or hasn't prepared enough cash to be able to pay the bill. This idea of punishing them by trying to extract more money from them has always felt like the wrong model to me. Right? Like I would pay if I could, and now you're telling me I have to pay double or extra. Like, what are you trying to do to me? Like, why are you just trying to bankrupt me for my phone is the way I feel about this. One of the things that we talked about on the prep call was this idea of transitioning from a SaaS model to direct lending. And this idea, like, it's a completely different business in a way. What were some of the pivotal triggers that made you as a team decide we're not going to do this thing? We're actually going to do direct lending ourselves. And how do you get enough market knowledge to be able to understand how to do that, right? Because it's tricky.
Absolutely, and that was that was a critical moment, I think, in PayJoy's past 10 years. When we launched the business in the U.S. and in Mexico, we started as that financing company, right? Because we knew this idea was so new. There isn't really any players in any of these markets that we can point to say, hey, this is how it's done.
Right.
So we needed to create that first. But it's very complicated, right? There's a lot of regulations, a lot of licenses required. When you start lending money to the public, right, there's a different level of scrutiny versus if we want to just provide software
to be able
the
to do that. Yeah.
Players.
Yeah.
Exactly. So we did the US, we did Mexico as that proving ground. We proved it. We proved that, hey, when you take this, this approach of trying to find a yes, you couple that with really strong collateral. Now you create you create a new product and you can address this new market. What we saw during the licensing phase of our business is, in hindsight, we realized how important that first piece was of that ethos of trying to find a yes versus just providing a strong collateral. And that is where I think we saw a lot of disconnection with the partners we were trying to make this work. Though we had a couple of really strong partners that aligned with that mission, we also have other partners that were interested in the lock, found that on paper that it sounds interesting that I can provide this collateral to a riskier segment,
right?
Like that should help. But there wasn't enough happening on that first piece of trying to find a yes. So we found ourselves doing a lot of consultation to these partners.
Right.
Here's what you need to do. Here's what you need to look for. And that was starting to work, right? Where we're starting to, gain more traction once we recognize that our product isn't that easy. We really need to consult our partners and not just pass them software and think they're going to figure it out. And that's what we were starting to do around 2020 when COVID happened.
Oh my.
So when COVID happens, right, you can imagine we're active in many different countries. At that point, I was living in Indonesia. We're active in Indonesia, Malaysia. We had, a pipeline of interest in Philippines, in Vietnam, in Cambodia, because you talk to these players and just on paper, this collateral seems so interesting. COVID brought that to a screeching halt, right? Like these existing banks and telcos, they can't fiddle around with the new initiative. Right? The world just shut down.
Right.
And in Mexico, where we were still doing the financing business, right, we're planning for the worst. And we actually saw the complete opposite. We saw customers pay us before paying their cable bill because what did you need more during lockdown?
Connectivity. You need connectivity with other people in other places, in other countries. You don't need to watch like reruns of, The Office or whatever it is. Yeah.
You don't even need to pay your car bill.
Right. Because you're not going anywhere. Right.
You're not going. So once we saw that, we saw the wind down of the interest of the software. At the same time, our Mexico business just grow in a way that just, we weren't expecting. That was really a big tipping point for us to recognize like, hey, we're sitting on something that is pandemic proof. Let's go all in on this. Yes, it's a lot of regulatory work. There's a lot of licensing work. It's a whole different business, but it's worth it.
So I want to make an analogy here because I really want to understand how things changed for PayJoy when these triggers happened, right? Particularly around COVID, and you saw that Mexico business really grow. When Netflix first started, and you'll see the connection here, I think, in a second, they had kiosks in malls, and you could order it. They'd send you a red envelope that had a DVD in it. Their long-term goal was always to do streaming, but there wasn't enough throughput and there wasn't enough compute, but they were always thinking about this, right? But fundamentally, they wanted to be a streaming company. But by the time there was enough compute and there was enough throughput, they had an operational team that really knew how to optimize for sending and receiving and tracking packages, which was now completely meaningless. And they literally sold that business and took very few people, if anybody, from that business into the new business because they didn't have any streaming experience, so it was irrelevant. How did it change your operational strategy as well, right? Because the software as a service business is very different than the credit scoring and lending business. How did it impact you guys on that front?
Yeah, it is very different, but the skill set that we were really investing in, which is strong go-to-market, operational, product, and eng teams that understood at the core what it took to originate a loan, which means we need good KYC, we need sophisticated pricing strategies, we need an easy way to plug in kind of local data to be able to say, hey, this I've created a valid, locally legitimate contract with the customer, right? Which is all done through a web portal, and then we continue to use our blocking tech, right? So we didn't lose really any of that transferring from the licensing to the finance business. What we did is we recognized like there's a big need to invest further in our risk teams, in our data science teams, in our finance teams to really recognize the fact that like, hey, we're a financial service company now, right? We're not just a SaaS company. So there wasn't that same situation where we built this big logistical arm, or in the case of Netflix, that just wasn't able to kind of do much else. Everything we learned during the licensing, we continue to apply that into our existing finance business today. We just have a much stronger financial and risk arm to complement that.
In particular, because nobody had to lose their job. A lot of people at Netflix lost their job, right? And that's kind of
Yeah.
terrible, I think. So you're operating in multiple countries now. How many countries are you operating in, approximately?
Eight. Philippines is our eighth and most recent country.
Okay, but if you're operating in different countries, right? What's culturally true in the Philippines is not necessarily culturally true in Mexico, not necessarily true in the United States or in Indonesia or in the other countries, right? Every country is different. Are there different types of data points and different types of sort of AI powered analysis that you do? Like, what's the most predictive in the Philippines that's different than what's predictive, let's say, in Indonesia, for whether someone's actually going to be able to pay this stuff back, right?
Yeah, absolutely. I think there is a common. So on the cultural piece, yes, aside from language and food, all the basics, like there's cultural nuance in the ways we get a hold of customers, communicate, right, really try to get our message across.
Right.
What I find most interesting is like when we talk about the unbanked segments across all these countries, they're actually pretty similar.
Really?
Right? It's similar in the type of data you should expect. Right, majority they're not going to have formal employment in many cases. Right, so you got to think, well, someone who is an informal worker in Mexico probably has very similar information available as an informal worker in the Philippines, and we've seen that hold true in many of our markets, right? So our baseline of what we need, what we expect these unbanked customers to have, basically in all of our markets today, and what we expect for new markets, is pretty standard, right? At best, let me say, yeah, like at a minimum, we know they're going to have one form of ID and one phone number. So we need to find a yes with that, right? Doesn't matter. We need to go with one ID. In Philippines, there's 5, 6 IDs that we can support. In Indonesia, right, we know there's one form of ID that we expect to support, but it doesn't matter, right? We need to find the ID that these customers will have. We expect them to have a phone number, and it all starts from there. So from that starting point, you can imagine like that's not a lot of information. So when we can find a way to say yes with that basic information, then anything that does exist complementary in markets, whether it's local credit bureaus, telco score providers, different alternative data that can exist, companies that can tell you whether or not Michael has paid his utility bills on time. We look for anything and everything that might help, and then we just allow our data science team to really find the true predictive signals. What we've seen, and this can, how much of a weighing these different factors can have in markets can be a little different. But one thing that we tend to look for is anything that can be given by a phone number or an ID, right? Because that's always going to be the starting point for our customers.
Is there, what's the right way to say this? As time progresses, right, new types of data become available. New types of purchases are happening, online purchases, offline purchases, buy now, pay later, like all these kinds of things are going on. Are you adding data points, not you specifically, but is PageRoy adding data points along the way if they find out that those are good predictors either in the Philippines where you are or in other emerging markets where you're operating? Do you know what I mean? So right now you have some criteria, but then you figure out, oh wait, these three things also work. Do you then add that to the criteria that you use for trying to get to a yes?
Yeah, absolutely. So, the find a yes is kind of like that first entry, and then over time, the data we get from our existing customers, because not every customer you get will be perfect, right? We will have some bad actors occasionally sneak their way in, which also helps inform us for future decisions. But after we find that yes, what are machine learning and pricing strategies and what our data science teams optimize for is then trying to find not just a yes, but the best offer for that particular customer's risk, right? So let's say we come across a customer with some historical bad marks on their credit profile. Right? An incumbent might just tell you no. We're going to tell you yes, but we may ask you for a slightly higher down payment, right, to kind of lower our risk, right, versus someone who looks really clean from a credit perspective. We're going to tell you yes, and we might charge you a lower down payment, right? We want to continue to find that yes, continue to maintain that yes, but also recognize that, hey, to really scale this business in a healthy way, we have to get smarter with how we price for risk. And that's really where the data that we become more familiar with internally and what becomes available in the market just feed you know that exponential improvement.
Tell me again, what year was the company started? Refresh my.
2015.
So 2015. So not that long ago, but in AI terms, it may as well be like 1915 in a way, right? So since the prevalence of AI, and I think ChatGPT was released at the end of 2023. Is that true? I can't remember anymore.
Not like a couple of years ago, yeah.
Yeah, I can't remember. COVID screwed up my vision of like what time it is. You know what I mean? What year it was and stuff like that. But since that has been released and unleashed really on the world, and everybody now is building like really powerful AI stuff, has that changed the way that you've done some of your analysis, or has it made it easier in some ways to do it because you can do it at scale?
To be honest, I don't know how much has been motivated externally. Like we were doing a lot of this before the boom, like ChatGPT, right? We were looking at kind of machine learning and just trying to find ways that our data makes our data smarter, really since the beginning. So yeah, I couldn't speak to the specifics. I'm sure if we spoke with our risk and data science teams, they might tell you like, yes, just the tools and the access and the mechanisms that they can do their work has definitely helped them go faster. I wouldn't doubt that. But we've been thinking of this machine learning kind of pricing strategy really from the onset.
Awesome. So you mentioned a couple of minutes ago bad actors, right? And bad actors to me at some level means fraud. So how do you handle or even detect fraud, and then what's your reaction to it as a company?
When you're a lending company, you know that you're going to get fraud. Right? You're going to get people once you start
Yeah.
saying, "Hey, we can help you get some money," or this perception of some free money. There's going to be people trying to find out how do I get that, and when people find out like, hey, there's these new kids on the block giving people phones, and all you need is a 20% down payment and an ID, right? Some people can get a little impassioned to find creative ways to
Take
to
advantage of
really
that. Yeah.
take advantage of that.
Yeah. Fair enough.
Exactly. And unfortunately, when we talk about this unbanked, on paper, your good customers versus your fraudsters don't always look that different,
Right.
and they often live in the same areas,
Fair
right?
enough.
So, when you try to think about, certain neighborhoods that might be notoriously bad, well, not everyone in that neighborhood is bad. Probably the majority of people in the neighborhood are good. So we're going to penalize the vast majority of good actors there because of some bad ones? No, right? We walk in there knowing that there are going to be bad actors trying to sneak their way in. That's where the local tools, local partners help us have some defensibility, That's where we're constantly investing in making sure that our locking technology is as ironclad as possible, right? Because it's not a one-time solution, right? Software is constantly evolving and updating, so we invest a lot to make sure we stay a step ahead of those jailbreaking types of services. And it's an ever evolving battle with those guys. But we appreciate the creativity that we'll see in markets
Yeah,
from
you learn something at
different
least, right?
actors. Absolutely. Over 10 years, I've seen different types of fraud in all of our markets. Doesn't matter if it's in the
Sure.
US, Mexico, South Africa, Philippines. There's creative people in all these markets. It kind of keeps us on our toes to make sure that our technology stays on top of that. And when we do come across those cases of fraud, um, we will react in ways that try to limit the propensity for that fraud to continue. A really common example are like syndicates,
Yeah, I was going to ask
people
about this.
who,
Go ahead.
yeah, people who organize, they'll find a page or affiliated partner,
Right.
right, in some large commercial center. They then go out and start recruiting people.
Yeah.
Say, hey, for $20, you know, we'll give you $20 if you just help us do this. Right? You're going to go there, you're going to apply with this, you're going to get this phone, you're going to bring it back to us. And a lot of unknowing customers think, oh, all right, like that seems easy enough for me to do.
Right.
Then what happens? Right? We then start to see one or two very familiar faces constantly going into our partner store, bringing referrals. That guy doesn't walk into the store, but he keeps sending customers in. And when we talk to those customers, they say, yeah, the guy outside told me about this. That's not common,
No.
right? It's not that it's not common in one country. That's not common anywhere.
Yeah. Yeah.
Right? When you're going to try to get the legitimate customer going to finance a new phone or purchase a new phone because they're in a pinch, they're not just getting motivated by some guy outside. We might not always hear about that right away, but the data, over time starts to reflect those spikes of abnormal activity. And then we need to address it. And we address it either by limiting what devices are made available in that store. Sometimes we temporarily suspend activity in certain stores just so we can kind of bring down that fraud activity. Sometimes we'll want to engage with these actors to figure out like, hey, what's going on? How can we help? Right? Because what's always the worst case for us that has happened, right? There are cases where we just need to, suspend certain locations because the propensity for that type of activity gets so large. That isn't ideal, right? Because we know that we're adversely affecting some good customers in that process. But it is part of that battle that we need to go through to be able to serve the greater good. And it's something we've done, I think, successfully so far in all of our markets. Knock on wood, right? We have a long ways to go, but I think we have a good framework for how we can prevent and also react when they slip through.
So your partner stores, right? The people that are actually serving the phones to PayJoy customers, they have regular customers as well. People who just walk in, buy an iPhone, buy an Android phone, and those phones don't have PayJoy software shipped on them. But if I come in and I specifically ask for a PayJoy phone, it has software pre-installed on it that's specific just to PayJoy. In other words, what's the difference between that phone and a different phone? Let's say if I just walk in or if you walk into that store, and let's say after I get that phone, for some reason I hit the lottery or I no longer need like that service per se, can I sell that phone? Like, do you know what I mean? Is it a bespoke implementation? How does that work?
Yeah, it's a great question. I'll try to answer without getting too technical.
Okay.
But basically, we're not providing custom SKUs or custom PageRoy phones per se, depending on the brand the customer's interested in, whether it's Samsung or Oppo. I'll use those two examples. Um, we work with Samsung in a certain way to have PageRoy secure to our liking, and we'll work with Oppo in a different way, but those two paths end up with the same level of PageRoy lock-in technology. Now, when that customer wants Samsung, that's a normal Samsung phone. That's the Samsung inventory that partner has. And if they want to purchase it with cash, they can do so, and PageRoy will never interfere. When they want to finance it with PageRoy, through our checkout process, we're going to provision that device to install PageRoy. It's not, necessarily going through the App Store, but there's a specific installation method that allows us to activate PageRoy on that device. And the same goes for Oppo. Oppo is a little different, where devices can be shipped with PageRoy kind of baked into the firmware, but it's only if you finance it with PageRoy that we then turn on PageRoy. If you purchase that same Oppo device with cash, you'll never have to worry about PageRoy interfering with your experience. Now, to your last question, once you fully pay off that device, you're now the owner of that device. You can remove PageRoy, you can delete the app. The PageRoy app will never interfere with your experience again. And if you want to sell that device, or give it to family, which is the more common thing that our customers do, they'll give it to relatives, their kids, their partner, and they'll come back for another phone. But once they fully pay, they're the rightful owners. They can do whatever they want with their device.
Is there other digital collateral that you're using, or even other non-digital collateral that you're using to lend money to people?
It's all right now. We'll see how this evolves over time, but right now it's still largely driven by that smartphone. Today, like in the case of Philippines, that it's a new market, our entry product is, hey, we want to help customers get that new smartphone. In cases like Mexico, we're much more mature and have more products. We can take your existing smartphone and then give you a more traditional credit line or credit card based on the value of that device. But the digital collateral still holds true. I'm still going to try to, similar concept like LoJack in the US, right? If you have, these insurances available, then you're going to pay a better rate. Right? So when you have your existing phone, you have a good smartphone, and you want to get a new credit line, we're going to apply the same digital collateral, but now it's so that you can make any purchase, not just get a new smartphone.
So it sounds to me, and just tell me if I'm right here, like your retail partnerships must be really important to you.
Absolutely, absolutely. In all of our countries, all of our markets, we have retail partnerships with large players. Like in Mexico, we're scaled up with Walmart. We work with large retailers in South Africa and Brazil. In Philippines, we're starting to grow with some of those large players as well. And they're important because they exist. They give us that quick distribution. They're also a place of brand recognition for these underbanked customers. So yeah, we invest greatly in these partnerships of ours, and we try to give them residual value, not just with helping them sell more phones, but bringing those customers back to eventually buy anything that they want.
So this is a little bit of a follow-on to what I asked you before, but it just popped into my head here. If this financial stability is really important to PageRoy, and it sounds like it really is, right? Are there clear pathways where, like, first-time borrowers, right? So the first-time borrowers are going to grab the phone. That's going to be their digital collateral. They're going to pay off the phone. But again, let's say they progressively get wealthier and wealthier. Are there pathways to other or more financial services, you think, to be able to offer them? And once they trust you, you're already there. Like, why would they go to another bank for something if they could just come back to PageRoy? Is that part of the roadmap or the thought process?
Absolutely. Yeah, absolutely. We're finding customers that no one else has been able to serve, and these customers, with the smartphone, we see them repeatedly come back. Even now that we've only been operating for about 12 months in the Philippines with 4, 6, or 9 month terms, we have about a 30% repeat rate right now of customers paying off their phone and coming back to get another phone.
That's a lot. Right? 30 to 40%. That's a lot.
And that's basically with very minimal, basically no marketing. We haven't done a ton in the Philippines. It's just customers knowing PageRoy, knowing we gave them that first opportunity, and that just inherent loyalty they have is very strong. They're super sticky. So yeah, part of the roadmap here is we want to continue to provide more financial services, better rates, and we report back to local credit bureaus. So I've had, several cases where I'll speak with customers and say, hey, I never had a credit score after 2 years of PageRoy and 2 smartphones. I have a credit score, and now I've been able to access a traditional credit card. Right? So, yes, we want to be able to give them the best services we can, and we'll continue to evolve to be able to serve our customers and maybe even inch up. But we're also helping them just build that financial literacy outside of PageRoy so they can access everything.
So you won't believe this, but I actually pay for my phone monthly.
As do I. As do I.
But it's just funny, right? Like I don't need to do it, but it's 0% interest. I buy it at the store, excuse me, and 0% interest, and I just pay like little bits and pieces of it over a 10-month period of time. So I completely get it. And you're right. I'm incentivized not to miss a payment because I want to get another phone in 2 or 3 years, like when something new or life changing comes out. This is essentially some kind of embedded finance product, yeah? Right? Because it's embedded in the product, it's embedded in the service that they get when they go to your retail partners. And if you look forward to the future, how do you envision the future of embedded finance in emerging markets, right? Because that's what you're doing at some level. And you're doing it right at the bottom of the pyramid, but you're going to keep moving up, I think. How do you see it advancing over the next like 3 to 7 years?
Today, when I look at Philippines, when I look at Indonesia, and I'll focus Southeast Asia, where I spend a lot of my attention for the past 12 months, there's a lot of incumbents today going to this super app neobank setup where they're not just going to help you order food,
Right.
but they'll help you make a small $1, $2 top up for your phone bill. And if you pay back that $2 top up on time, maybe they'll give you a $10 credit to go shopping for groceries. And that exists today, and I think that's going to continue to evolve. That's paving a lot of, I think, inroads for new players like PayJoy, and the this proliferation of buy now pay laters. I think just in Philippines alone, there's like 3 new buy now pay later options that have popped up. Um, so I see the market continuing to get crowded, right? There's going to be people who see, cases like PageRoy where we have pretty quick success and we want to continue to grow, rapidly. We're going to have that crowding effect. That's without a doubt. I think, we'll see that in the next 3 years. What happens after that over the next 7 years? I think there will be a bit of shift, some consolidation. It's not an easy thing to do to lend money, to the unbanked, right? I can say we've been successful, but it has not been easy by any stretch. I think that's what we'll see 7 years from now. There's going to be a lot of learnings. There's going to be a lot of pain. There's going to be a lot of new players that just don't last. Frankly, and I don't mean to
No, but
sound
that's
too
definitely going to
arrogant in
happen. And
that, but
consolidation was one of the things I expected you to say. Sorry, go ahead.
yeah, and I think ultimately it's going to come back down to like, the two things I think we started with, like one, like what's really differentiating these companies when everybody's looking at the same data and everybody's looking at the same customers is kind of that ethos that I think I haven't seen too many companies with that ethos of trying to find a yes.
Right.
And there definitely isn't anyone who has invested so long in having the type of digital collateral that we have. So I think as long as we can maintain that, once that consolidation is happening, I think we'll be one of the ones that can look back and say, hey, we've done it the right way, and we're in a strong position to last.
So one more thing, Rene, before I let you go. I have the largest insurance podcast in the world. It's called the Asia InsurTech Podcast. It has a sister show called InsurTech Amplified. And between those two shows, I've probably done 300 recordings and probably more with some of my other partners just in the insurance space alone. And in Asia, we know that insurance penetration is not nearly as high as it is in the Western world, particularly on a GDP per capita basis, right? But one of the things we found in Asia is that once you provide financial inclusion, right, and you provide credit in this digitally collateralized way, is that people then have the ability to start acquiring things. And once they start acquiring things, they think, what happens if it gets stolen? What happens if it gets broken and stuff like that? And I'm curious,
Yeah.
and I won't ask you anything else after this, I think, but I'm curious if with all of the people that are using the PayJoy service, is there a way to embed insurance in this as well over time so that the things that they're acquiring, then one of the new financial products that they have is protection for the things that they're acquiring?
Yeah, absolutely. That kind of comes back to our product roadmap and just the different services we want to be able to provide customers over time. Um, to be honest, when we first started Patreon, we started with a baked in, uh, you know, full coverage insurance plan. We said like, hey, for ended up being like maybe $2 to $3 extra for customers, throughout the maybe like $5 extra. It wasn't a ton of money, at least from our perception, right? At first, it was like, hey, and there's a lot of utility in this insurance plan, right? If something happens to their phone, they're protected. Um, and we did this for every loan. And the claim rate, the usage rate was so low that it actually ended up being something that at that time was hurting our customers, because we were imposing additional fees to customers that just weren't using it. And we adjusted at that time, and then kind of fast forward to where we are now. Across all of our markets, we'll have some markets that have a traditional phone insurance, some markets that have more of a warranty repair plan that's more ad hoc.
Yep.
But what we always do is we listen to the customers, right? So if the customers, at the end of the day, there's strong demand for these insurance products, we always take a look. We always try to invest and get the best service for them. And here in Philippines, we know there's a strong demand for insurance. Actually, not just phone insurance, but insurance on the loan as well. It's like a very, very popular, super common thing that people have asked us for. They say, hey, I don't want my family to be liable if for my loan if something happens to me. Do you offer any type of loan insurance? Like, well, no. But now we're starting to look at that. Like, yeah, like if that's something that our customers want and we can support, we want to meet them, as much as we can. And again, we're only 10 years old, right?
Right.
We're only kind of starting to scratch the
Totally.
surface of all there's a lot more to come.
Rene Payan, the country manager for the Philippines at PayJoy. This was great. I hope you enjoyed this as much as I did, man. Thank you so much for your time.
Right. That's it. Thank you, Michael.